For us. I do want to welcome in our next guest, though. Joining us now, Patrick Mueller, the RFC and president at Bella Advisors. Patrick, great to have you back on the show. I'd love to just start with your thoughts on this week's action as we see the markets under pressure again this morning.
Yeah, I think we're just seeing a normal pullback where we just have Wall Street taking profits, taking some chips off of the table to start redistributing it here in the near future. But we've been overdue for a pullback, and I think it's to be expected. How far down it's going to go, I don't think we're going to see too much of a retracement here. So I think we'll start seeing a positive move forward here in the near future. But I think a little bit longer term, we're going to be in for a 10 to 20% correction. I think somewhere within the next 6 months or so.
So, Patrick, you're in line with that commentary that we got from Goldman earlier this week, saying that we are overdue for a pretty significant correction, as much as 20%.
Absolutely. We are so overblown, I think, right now. The pricing is overblown, and we're going to see a pullback at some point. What the trigger of that's going to be is going to be hard to tell. It could be some type of black swan event, some type of catalyst that's going to start driving things back down here. But we've just been so overdue for a market correction, and it's hard to believe, right? We're 16, 17 years from 2008, and since the markets went down 50% at that standpoint, and we did have a little bit of a pullback in 22. The 22 wasn't great whatsoever, down 20%. But from where we're at now, I think it's just a normal move that we're going to see that haircut.
So how are you advising your investors right now in terms of how they're supposed to proceed, as we still sit pretty near to all-time highs, even with this pullback we're seeing this week? Where's the best value? What's the play right now?
Great question, Marley. And when it comes to the folks that we typically work with, our clients are typically retired or maybe 5 years away from retiring. So we're always very cautious. So we always want to keep a certain amount of money that's safe and protected from market losses. But being in the market, it's good to diversify. Something that's been doing really good. Utilities, you see Berkshire Hathaway sitting on over $380 billion in cash right now. They're ready to pounce, right? I think they were a little early, but they're not going to get it wrong. But they're going to start throwing that cash out there when we start seeing the markets coming down. And so companies like shares of Berk B long-term are going to be really good. Value companies, things that you can close your eyes and 5 years from now, they're going to have done well. So those are things, because people say, Marley, when markets are down, phrases I can't stand, which is it's only a paper loss. But nobody ever tells you that it's only a paper gain. It's not a gain until you realize it either and take some of those chips off of the table. So I think this is a good time to be taking some of those profits and some of those chips off of the table and moving it over and diversifying.
And so you mentioned Berkshire Hathaway there, and I know you're a big fan of Buffett's investment style, traditionally sitting on 10 to 20% cash. Do you think that is a good move for the average investor, or is that more specific for institutions that have dry powder to deploy?
I think it's good whether it's institutions or individual investors. I think right now with markets being at an all-time high, when you see everybody doing the same thing, you're sitting next to somebody in Starbucks and they're starting to give you stock tips, right? Have you bought your NVIDIA yet? That's when you should start being cautious. And so I think it's good for people to be taking some chips off of the table and have that dry powder, have that extra cash to throw at something, so when we do have a downturn, that take advantage of buying opportunities. But more importantly for our clients, they can't afford to take the big losses at this stage when they're retired. They need this money to live off of.
And Patrick, we always have this tech conversation. Is tech king? We've seen this pullback on some of these AI earnings recently. I guess, is tech still king? And are you still bullish on tech? What's your investment thesis here?
With AI and everything that's driven around it, you have to be bullish on tech. Long term, I mean, that's where we're seeing things move. And we're seeing, you saw the earnings that came out for a lot of these companies that were fantastic. And I think we see the biggest growth in earnings coming from that particular sector. So I think long term, we're seeing a little bit of a pullback right now, but long term, I think we can see that moving forward. Hasn't been too great for a lot of companies right now, or from an employment standpoint, where you've got Amazon and Microsoft and big layoffs that are going on right now, mainly to do with technology and the AI rising and cutting back on the workforce. So that's something to pay attention to as well.
Yeah, certainly. And outside of tech, are there any other sectors that you're bullish on right now?
I really like utilities with all the AI and all the data centers that are popping up. Like, we're the Silicon Valley of the South here in Atlanta. We have a ton of tech companies here, and we've got these huge data centers popping up everywhere. And you've got companies that are up big time this year, and utilities, and utilities tends to be very stable. So I like that a lot. And I think, another thing is silver. That's been, people have been more bullish on gold than they have been on silver, but I think moving forward, I think that's a good place as well to be diversifying to.
And with the metals, we've seen this massive surge to the upside, a bit of a pullback of late. But I mean, gold, I'm looking right now, is back above the $4,000 level. And do you think that trade is getting crowded? I mean, I think last I checked, we're seeing gold miners up triple digits pretty much across the board. Or is there still more room in that trade?
I think there's still more room because there's so much uncertainty. Like, the consumer sentiment report came out this morning, and it was a sleeper where people don't have a whole lot of confidence right now. So I think moving forward, as there's uncertainty, the tariffs, inflation, how much is this stuff going to be affected? I think people are going to keep putting their money into gold and precious metals as until we can see a clear picture of where the economy is going to be heading longer term.
And Patrick, I know we talk sometimes about the potential for a credit crisis here, and you mentioned inflation, so I do want to talk about it. A lot of consumers fighting it with debt and using their credit cards specifically. We are seeing some pretty powerful credit card numbers, at least in the last decade and a half or so. How big of a red flag do you consider that is for the broader economy?
I think it's huge, and I don't think people are talking about this enough. We're at all-time highs in credit card debt, and these interest rates are insane, 20+%. How in the world do you pay that stuff off? It's crazy. And what's crazy right now is you have people that are refinancing incredible mortgage rates of 2 and 3%. That sounds like a dream to be able to get right now, but you seriously have people that are refinancing out of their 2-3% mortgage rates, and they're moving into 6, 7, 8+% refining into those higher interest rates to battle the credit card debt and to pay that debt down and to try to survive and combat inflation. And this bubble is going to pop here, and I would say within the next year or so. There's going to be a reckoning from that.
Patrick, always great to talk to you. Thank you for being with us today on Trading 360. That's Patrick Mueller from Bella Advisors, and we've got a lot more for you coming up in the show as well.